Hello, welcome to another edition of Venture Capital Connect. I'm Godfrey Powell, and I lead VC partnerships here at Facebook. Today, I am so excited to welcome a good friend of mine and veteran investor, Chris Redlitz, who is founding partner at Transmedia Capital. Transmedia was founded in 2010. Chris and his partner, Peter Baboff, founded it, and they focus especially on fintech, digital media, e-commerce, enterprise, and other investment areas. Their focus right now is largely in the early stage of investing, and we're so excited, Chris, that you were able to join us today and share some of your insights. Thank you.
Thanks, Godfrey. Thanks for having me.
Cool. Well, first up in the bat, because the listeners want to know, really, why did you start Transmedia, and what investment gap did you perceive in the market 10, 11 years ago?
Yeah, sure. We started it really at the end of 2009, coming out of the recession. And we really started as an incubator accelerator. And if you remember that time, there was sort of a dearth of office space, and the market, it was just recovering from the recession. So we really looked at the opportunity to work with companies, especially large brands who were being disrupted by startup companies. And at that point, there really wasn't an incubation strategy or innovation strategy for many large companies. So the premise really of Kick Labs, our incubator, was to match those companies, large brands, with startups that may be disrupting their area. And it was companies like Warner Brothers Studios, Best Buy, P&G, Interpublic Group, IPG, and they would bring in some of their team. We'd bring in 3 or 4 or 5 startups that were relevant to them and introduce them. And the whole premise was to understand what the disruption was happening in their market and potentially engage with startups. And on the startup side, potentially get a new customer. So our investment practice really came out of that incubator. And in 2013, we made a decision: do we continue to incubate and really provide space, or do we focus just on venture funding? And we decided just to spend our time and focus on venture funding. And we sort of jettisoned the incubator, and that's where we are today.
That's awesome. And it's really interesting because I know you have a background as an operator in a number of large brands, most notably Reebok. And so really understanding kind of like the challenges big brands have with understanding innovation and then bringing that innovation to them via your incubator really makes sense. Talk to me a little bit about how does your background as an operator influence your firm structure and your investments?
Yeah, I think it's really important. Even at that time with Kick Labs, it was important that we understood that process as operators, and even the companies that we had there. I mean, we had Wish was one of our first companies, or a public company today. They went through that, and we actually, when Naval and Nivi started AngelList, they started at Kick Labs. So you can see how the evolution of companies over the last 10, 11 years has happened. Those obviously been very successful. But I think it's really important to understand how to sit on both sides of the table. When you're an operator, you have to obviously pitch venture capital, and you have to understand that process. But you also know the sort of pain involved in many cases, because not every company is successful. So you leverage that, those successes and failures as you are working with entrepreneurs. And, we've really taken a very active position at the early stage. We want to be active with our portfolio, and we want to be accessible. It's one of those things where I wish that I had the resources that we're trying to make available when I was running companies. So I think as an operator, what would I like to have had, or what access would I have liked to have had when I was an operator? And those are the type of things we like to provide.
That's great. I've, as part of preparing for this call and knowing you for a while, there's some investments you've made where the CEO leadership team says that's the first thing you say with Chris. It's super responsive and gives great advice that I can actually use and is available. And I think that's a differentiating factor in why you've had the success you've had.
And it may not be everything they want to hear either. you know, I mean, it's you got to be direct and honest. Like,
Yeah, well, tell me a little bit about that. One or two things. How do you, dovetailing off of that, how do you sit an entrepreneur down, a founder, and tell them stuff that they don't want to hear, and then how do you navigate them to the direction that you think is best for the business and a positive long-term outcome?
yeah, I mean, we're not trying to run companies. These are their companies, but we see, warning signs. One of the big warning signs, obviously, is funding. If they're running real fast and you see they're going to hit a brick wall with funding, you have to make sure that they're aware of that. And some, surprisingly, are not. And there may be employee issues where, or even founder issues where it's just not working and they have to make a tough decision. I mean, I've been involved in having to, disengage with founders. That's not an easy thing to do. So I think those are areas that we can add value because we've been in those situations, and you want to react before or act before it's too late. And so that's what we try to provide. Be very straight, and again, it's not always what people want to hear, but it's for the right purpose and trying to lead their business or at least direct them in the right path. And as a result, we don't take board seats because we feel like we can have a little more flexibility outside the board setting and outside the governance of being a board. So, we really try to be an advisor. We're obviously investors, and we have a fiduciary responsibility to our investors. But we really want to be responsive to founders. And I really think about, there's this term founder friendly. I think it's about being founder empathetic, but also being very direct and accessible.
I love that. And kind of moving where you talk about taking action, shifting gears a little bit. You know, Needless to say, our audience is aware that we're in the midst still of a pandemic, and there's been a lot of change over the last year. You started this fund and at least started Accelerated in 2009. And since then, can you talk about how, particularly over the last year, if at all, your investment filter has changed? Are there things that you look at like now you might have taken more of a flyer, if you will, on a particular investment, but now you want to make sure that they have stronger unit economics? Or perhaps the pandemic has shifted your focus, so you're focusing more on new verticals that are unlocked now. Can you talk about your approach, especially given light of current events?
Yeah, I don't think our fundamentals have changed much, really. Obviously, the dynamics have changed. So some companies have benefited from the situation, some have not. But as being venture investors, our investors evolve and mature and have success over an extended period of time. So the pandemic, hopefully we're on the back end of that, but it's been an intense year where some things have changed. You'd have to adapt. Some have to adapt their business. Some have to adapt how they run their business, obviously from a virtual point of view. But when we're looking at investing, today's market, whether it's up or down, is not going to affect us necessarily because we're in a 5 to 10 year, cycle of how we're looking and progression of how we're looking at companies. So, I don't think it's really changed how we look at it. It's changed sort of our interaction with companies. And frankly, it's made it harder for us at an early stage to invest because we like that personal interaction. We like getting to know founders, and we like to have, those sessions where we can really dive deep into, the value proposition of the company and so forth. It's hard to do in this sort of two-dimensional environment. So I'm looking forward to getting back in a whiteboard and having those sessions because I think that's the most valuable for me.
Yeah, that's great. And I too miss those whiteboarding sessions, right? Having a cup of coffee, that kind of intimacy and creating the next piece of innovation or a new business is exciting. So speaking about businesses or verticals, what specifically a particular company or a vertical excites you now and why?
Well, I mean, it's the cool thing is this market changes all the time. I mean, that's kind of the fun part of being in venture capital. I mean, It's a lot of work and it's not easy necessarily, and you have to be super diligent all the time and keep your ear to the ground. But we see things changing. I mean, look what's happening in NFTs today. It's like exploded, right? And who knows where that market's going to go, but it really didn't exist a year ago or even really to this degree 6 months ago. And, we're very involved in DeFi, decentralized finance, and that area is really exploding as well. So, those are areas that I think are going to have value, and yet we have to really pay attention to those. But I'm also excited about companies that we're currently invested in. They're public companies that I mentioned Wish before, or a company like Domo that's in our portfolio, or Hippo that just just is going public through a SPAC. Those kind of companies, I'm excited about their potential growth, and even at the early stage. We actually have two funds. We have our limited partner fund, where we have, you mentioned before with Peter, that we have a very sort of specific investment criteria. We also have what we consider a moonshot fund that we've done on a personal side. And those are really sort of out there. And one of those companies is Boom, which is creating the next supersonic jet. That's super exciting. So, we've got a wide cross section of companies that we're invested in, personally or through the fund. So, it keeps it super exciting. And, definitely venture capital isn't boring at all, because if you're constantly looking at that next area to invest in, it'll be there. The next great company, we're going to see the next great company come out of some of these areas that I mentioned.
That's exciting, especially when you talk about the excitement, which leads me to my next question, which is you were running a company in the late '90s, and there was talk about which wound up happening of a tech bubble, and then it wound up bursting in the early 2000s. You hear both on the pessimistic side and the negative side. You hear people saying NFTs, Bitcoin, the current overall S&P 500, they're at inflated prices right now due to a variety of factors. We don't have to list them all. And then you have the other side, which is given the fact that low cost of capital, given the fact that the pace of innovation has increased dramatically in the last 10 or 20 years, this is a moment in time where you can continue to invest and see outsized returns 5 to 10 years from now. Where do you kind of stand? Do you see similarities to 20 years ago? Are we in the middle of a bubble? And then I'll tag in that other question, which is when you think about investing, how much of that plays into your head from a valuation perspective as you're looking at deals?
Yeah, it's a lot to peel away, but but I could talk about 99 2000 for an hour also. That was an interesting time. Obviously, the internet was relatively new. Businesses were just forming. I was running a very rapidly growing company. We raised a lot of venture capital, and you attach a .com to anything at that point, and it increased the value of the company just by having a .com. And the fundamentals of businesses that were going public were pretty weak. There was also an easier barrier of entry to going public. So as a result, and there was this sort of exuberance that was really a bit out of control, to be honest with you. So, I don't see that as being replicated now. I think the companies, you could argue that the valuations are aggressive, the multiples are aggressive, but I don't think they're way out of line. You mentioned the cost of capital. Obviously, that plays into it some, and we'll see how that changes. But I don't see the same euphoria per se in the market that there was then. And I see companies, and it's harder to go public now, than it was 20 years ago. So, I think that we're going to see evolution in the market, obviously, now with new tools like SPACs. That could create a bit of a bubble effect here in the market because there's alternative ways to go public. And those, SPACs have a maturity date. So we may see sort of a little bit of a dilution in quality of companies over the next 12 to 18 months if SPACs, because they have, as I said, many of them have expiration dates. So we'll see if that has an impact on it. But it's a far cry from what it was definitely in 99, 2000. And that was sort of gutted things for a while. But even then, we hit a low in sort of the end of 2000. By 2003, in the fall of three, we're headed back again. So we really invest that we can power through some of those downturns. And strong companies will survive. It's some of the best times to invest coming out of downturn, and that vintage coming out of 08, 09, you see some great companies coming out of that vintage. So it's not a bad time to invest. I look at doubling down when things are bad, to be honest with you.
That's great, and you're absolutely right. Right, we look at companies like Airbnb that came out of the '08 the '08 time frame, and they've gone on to be incredibly successful. I guess
Yeah.
the last part on investing before we shift is you talked about the value you want to provide to founders. You talked about how they can think about their business. Just, in this Zoom world currently right now, how has your due diligence changed? How have you gotten comfortable with talking to founders and other VCs over Zoom and either sharing information or at least, the old traditional is I have to look you in the eye and see how you like interact with the waiter for me to understand your kind of personality. How are you navigating through that?
Yeah, I think we leverage more on our network than ever before because it's hard to have that personal interaction. It's a little harder to do that personal diligence in a sense where you're interacting with people. And most of our deals actually come referred anyway. They come from founders that we worked with. They come with other venture groups that we work with. So there's a shared responsibility many times when you're doing due diligence, but it is harder. We have YC Demo Day coming up next week. That's all virtual. It's been virtual for the last couple classes. That's hard. Not only because you can't meet founders, but Demo Day was a great time for investors to gather. And it used to be a couple days where you could gather for a couple days and see people and share notes and spend some time with them. So it wasn't just the companies that were pitching, it's for us to actually interact with other investors that we may not have seen for a while. So, those type of things I miss, and we're just having to adapt, because I think we're going to go into a hybrid model now. I mean, the last investment we made was a company, the founder was in Austria, so that's just it's a new sort of way we're looking at things. We haven't always been Silicon Valley specific, but we're branching out further beyond than we normally had in the past.
That's great. As we kind of round up here, you talk about new practices from an investment perspective and whatnot. Over the past year, the VC industry has undergone some degree of self-reflection as it relates to diversity, as it relates to investors, black and brown investors, black and brown entrepreneurs, black and brown people who are on cap tables, etc. You along with your wife are also the founders of The Last Mile, it began as a prison program to help kind of identify prisoners, marry them with a tech skill set, and then when they leave prison, they have their rates of recidivism are reduced. And so what I see is really like you trying to try to attack kind of like the supply side of things in a different manner that helps society. Can you talk a little bit about The Last Mile and talk about social good with VC and with tech?
Yeah, I mean, it's really encouraging to me. We launched that about 10 years ago, and it's really encouraging to me that there is a heightened awareness in the Valley, certainly, in many ways. When we started this, the DEI, this whole idea of diversity, equity, inclusion, didn't exist that much. And there was not necessarily recognition of diversity, either in venture or in tech companies. That's changed dramatically. I mean, you look at pretty much any tech company today in the Valley has, a dedicated effort around DEI. And there are many, many more folks that are investing in, in different areas that in underrepresented areas for sure. We took a different tact. We have a venture group. It's a small fund, right? And we can only have so much impact. But as you said, we looked at attacking this more head on, where we could have a much greater effect if we used our resources and we identified a problem and we were able to leverage, what we have and grow that. And that's what happened. I mean, we started in San Quentin in 2010 as an entrepreneurship program. In 2014, we launched our first coding program. And today we've got many, many folks that are working as software engineers, formerly incarcerated, that are in companies like Slack and Dropbox and Square and Zoom, and a variety of other companies that, have really led the way to help this, not only in diversity, but also in helping those that really many folks in our program never had a first chance, let alone a second chance. So it's really been dramatic. Today, we're in 7 states. We're growing across the country. The pandemic slowed that growth a little bit, but the goal is to be, across the country and really help those that are less fortunate, and help them as they get out, have a successful career and sort of break that barrier of what's possible. And to think that somebody who had zero experience going in prison that's now making 6 figures as a software engineer didn't seem real. It's real. So that keeps us going, and it's been really exciting, and it's really been very cool that organizations like Google.org and Chan Zuckerberg and Stand Together Foundation have funded what we're doing. Matter of fact, Mark and Priscilla came in 2014 when we were just starting, and sort of gave us that acknowledgement that they would support it. And they've actually hired someone within the organization who's leading funding for criminal justice. So it's really been a huge evolution over the last 10 years. And I see the momentum continuing. I think this movement, if you call it, in many ways, it's going to continue more and more, not only for things like Black Lives Matter, but also just the idea of creating more equity in Silicon Valley and in tech companies. I really believe that's going to happen. And Beverly and I have dedicated, our life to this purpose, and we continue to grow it. So it's been hugely rewarding. And it's really an offshoot of the network that we built over the years and all those people that have supported us. So I'm really, really happy and proud of how it's evolved.
Well, kudos to you. It's a fantastic program. I love the way you're approaching it, and just appreciative of the other companies too who are hiring some of these persons as well. Okay, should we hit the lightning round as we wrap up? First question.
What are you going to ask me? Be careful.
First question. Best
just because we know each other well, that means you can't just ask me anything.
Exactly. Best book ever read.
Oh man.
Your favorite book, best one ever read.
Yeah, I'm an avid reader, so this is tough. Best book. Well, can I give a couple answers? I would say the most engaging book probably in the last couple of years has been American Kingpin. It talks about Silk Road. And maybe Bad Blood, which is the whole Theranos debacle. Those two are just amazing books. And I just finished B2 2.0, which is Jim Collins' new book. And I'm a big fan of Jim Collins from a business book point of view. So there you go. It's not one, but it's a few.
Awesome. If I were an angel investing today and I had $50,000, I said, hey, I got a bonus or something. Chris, where would you recommend I put it as an angel investor? Vertical, company, space?
Yeah, if this is the first time you're investing, I mean, honestly, it might be a good idea to invest in syndicates, because you can take that 50,000 and do multiple investments. Syndicates don't require a lot to get involved in a syndicate, and it lets you sort of layer on a wider cross section of companies, and it lets you see if it's something you're good at or you like doing. But to put your whole wad down on one company, probably not a good idea. Yeah, I mean, you can build a small portfolio of your own, right?
Exactly. That's good. Next one is, you and I have had several meals together. We both enjoy food. If you could only have one meal the rest of your life, what would it be?
Well, What I have every day, I'd probably to as my subsistence. I have a green shake every morning, so that's not necessarily a meal, but I have to have that every day. As a comfort food, probably dim sum.
Mm, love dim sum. And then last one. Any best work from home tips? Now that we've been on Zoom for over a year.
Yeah, take a shower, wear pants. I'm actually wearing pants right now, and exercise. Those are the
I
three.
love it.
It's pretty simple.
I
Um,
love it. I
yeah, that's
definitely take showers every day. Pants, I can't totally say. And then you're right, exercise, important.
got to do exercise. Yeah.
Well, Chris, always love talking to you. You've been a wise source of counsel, influential in the Valley. Appreciate you spending some time with us today. Thank you for sharing your insights.
Thanks for having me. Congrats on your gig here. I think what you and Brad and Facebook are doing is fantastic. I want to be supportive of it. It's great that you're supporting up and coming startups. So kudos to you for doing that. I really appreciate that. And I appreciate our friendship too.
Thank you.